Hello and welcome to Elevate Your Wealth. I'm your host, Casey Elkins, co-founder and managing partner at Elevated Financial Management. We're here talking about retirement as we are every week, and we're answering the questions on retirement minds. Specifically today, am I going to be okay in retirement? And we're going to discuss 5 key areas that we all need to be paying attention to. Before we jump into it, I'm here joined as always by my friend, father-in-law, and business partner, Mark Stimpson. How you doing, Mark?
Hey, Case, how are you? It's
I'm
so
good.
nice to be with our viewers today. I think everyone's going to really love our show today. But before we really get talking about that, I thought it'd be really nice to mention our on fire Mariners.
Yeah, they're tearing it
playing
up.
some ball right now, aren't they? And that is such a nice thing for us. We got our office design in our conference room. You have an unbelievably cool wall in your office. So it's really nice when the Mariners, it's just so much more fun to talk about when they're playing this type of baseball, because that doesn't always happen in Seattle, as we all know.
Yeah, it's been a rough couple years. Missed the playoffs by just 1 game and then by 2 games. And it's been a rough go, but things are going really well right now. The team looks good, and we've had great weather in Seattle.
Yeah.
You know, I mean, it's really shaping up to be a good year. And we've had a lot of changes around the office lately too, right? I mean, we've hired a few folks.
Yeah.
We've made some changes there. So there's a lot of exciting things going on, which is great.
Yeah, in fact, you know, those that are viewing today, we just want to thank you so much for tuning in, listening to our show a little bit, because our goal really is to educate our clients as to what's going on, because there's so much craziness happening right now in the market. There's a lot of confusion. What should I do? A lot of emotion can get involved. And what we want to do in this episode is to really talk about some things that everyone, including myself, who's of retirement age, needs to be thinking about and maybe doing. So we're going to talk about 5 specific things that I think will be very, very beneficial if you're viewing today. And we're going to want you to call in and talk to us about coming in, not having to keep your checkbooks at home is my point. We're going to have a conversation. That's all we're going to do.
That's exactly right. Yeah, and that's the same thing that we offer every week, but let's jump into it. So 5 main areas that we want to discuss. Number 1 is to protect what you've saved. And so, you know, for years, for 30, 40 years, you may have been saving and building for retirement, but eventually that money has to cause a purpose in your life. It has to serve a purpose in your life. And of course, that purpose is to make it so that you don't have to go to work and you can instead pay yourself out of the funds that you've saved. And so it becomes so much more vital that we protect what we've saved. We're no longer in that accumulation mode where we're building and growing our assets for retirement. We're now in a very different phase where we're actually going to start pulling money out. And so something is very different when it comes to that, Mark, right?
Yeah, in fact, I'm glad you're bringing this up, because we teach at several of our local colleges, right? And one of the things that we talk about is the importance of understanding sequence of return risk.
Yeah.
And right now, as you just mentioned, if you've got a portfolio, and let's just use $1 million for the sake of argument, you've saved that up, you want to possibly draw down maybe 5% of that. We know that would be around $50,000 a year. The real issue that we need to be concerned about is if the market starts to turn the wrong way on us and we are beginning to draw money down, it can be devastating as to how fast those funds that you were hoping were going to last 20, maybe 30 years, now might only have a 15 or an 18-year life shelf because of the market taking away so much of what you've saved. So you mentioned it. You've got to go from building wealth to preserving wealth. And that's what, you know, something that is so critical that gets missed when we've been on such a long bull market run. People have what we call a recency bias, right?
Yep.
They don't want to get off the train because they just think the market's going to continue to do that upward trend. Well, we're really seeing that over the last several months now, that that's just not the case.
Right. You know, and I think this is important too, when you really sit down and look at the math. If you have $1 million, let's say, saved for retirement, right? We use it because it's an easy number for us to do math with, right?
Yep.
So let's say you've got $1 million saved for retirement, and your plan is to take $50,000 a year out of that $1 million. So that's a pretty high withdrawal rate, and we're gonna talk more about that. But again, just for the sake of illustration, let's say you've got $1 million saved for retirement, and you're going to take out 5% each year. That's $50,000 a year. But if the market has a big downturn, and we've seen a lot of volatility lately, right? So if the market has a big downturn, and again, to illustrate the point, let's say your $1 million account value got cut in half to 50%. Well, your expenses still remain the same. You still need $50,000 a year. Where this really becomes a problem is that's no longer 5% of your portfolio, it's 10% of your portfolio. And so now you're really cannibalizing not only the principal that you've saved, but you're really setting yourself up for retirement failure, right? Because if you have to take out 10% each year, that is not a recipe for success. And it's something that we have got to plan for and make sure that we're accounting for that as we're moving into that next phase of our financial life.
Yeah, so if you're out there, you're thinking about this from your own personal perspective, please pick up the phone and give us a call, because what we want to do is just have a conversation and help you to see that a written plan, and we talk about this on every show that we do and every class that we teach, you need a written plan. So please pick up the phone, give us a call. Call 844-342-7142. Again, that's 844-342-7142. You're going to keep your checkbook at home. Just give us a call and let us have a conversation.
Thank you very much, Mark. So again, for those at home, you see the number there on the screen. You also can visit our website, which is efmnw.com. Again, that's efmnw.com. You can see a lot more resources for retirement. You can learn about our firm and what we do. And if you'd like to have a conversation, again, that's no obligation, no cost to you, and is really going to help you get a specific written financial plan, custom tailored to your needs, please pick up the phone and give us a call. When we come back after our quick break, we're going to talk about why investing like you're 35 is not going to work for your retirement, and having an income plan to make sure that you have the assets that you need. So don't change the dial. Come right back to Elevate Your Wealth. Call 844-342-7142 for your own complimentary written financial plan with Risk Report. Why take unnecessary risk when you don't have to? At 65 years old, would you drive to the grocery store at 100 miles an hour if 40 miles an hour would get you there safely? When nearing retirement, are you still driving your investment accounts like you're in your 30s or 40s? Have you changed your investment elections since you first chose them in your retirement accounts at work? Call Casey, Mark, and the team at 844-342-7142 for your own investment risk report and written financial plan. Do you know exactly how much risk you're taking in your investment accounts? Now that you've accumulated a nest egg for retirement, you want to be certain the risk you're taking in those investments matches your goals and objectives. Call Mark, Casey, and their team at 844-342-7142 for your own complimentary risk report and written financial plan, or use the QR code below to begin scheduling your appointment. You may not have time to recover from taking too much risk.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks do.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the fourth worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. Call now for your own complimentary portfolio review and written financial plan. Hello and welcome back to Elevate Your Wealth. If you're just now joining us, I'm your host, Casey Elkins. I'm here with my business partner, Mark Stimpson, and we're talking about the questions on retirees' minds. Am I going to be okay in retirement? And we have 5 main areas that we're discussing. We're still in our first point about making sure that we have protected what we've saved. And this is where, Mark, we want to talk about making sure that we're not investing like we're 35 as we're moving into retirement. So why does our investment strategy at 35 or 40 need to be different than when we're 60, 65 and approaching retirement?
Yeah, and it boils down to one thing. It boils down to you have a longer runway, right? You can afford to take emotion out of it because we know in the long term, and we talk about the red bucket in our office a lot, this is assets that we put in the market, stocks, bonds. We have all the different tools to use, but we have a longer time frame. So the market is going to do its thing over time, right? There's going to be great periods of upward swings, but there's going to be some down swings as well. And that's what we really need to be concerned about as we get older. And that's why the investing strategy has got to change. You've got to go into more of a preservation mode versus a growth mode, because if you don't, and the market hits us at the wrong time on the downturn, it can be truly devastating. And we're seeing some of that right now. We'll talk about maybe the tariff issue a little bit and how that's affected the market. But the bottom line is you've got to have a strategy that changes as we get older. The problem we see a lot in our office is people tend to keep doing the same thing. Right. They don't want to change, right? Change is hard for all of us as humans, but you've got to be willing to change what you're doing. Otherwise, it can devastate your retirement if you're not careful.
Right, and that really leads us into our second point, which is to make sure that we have an income plan. And that's really what is different, right? As you move into retirement, two things change, and we talk about this all the time in the office. Two things change when you go to retire. Number one, you have more time. Number two, you have less income. The first one is great. The second one is a real problem. And so now it's on you and what you've saved for retirement to replace the income that you would have had while you were working. And so it's really key. And I think this is something that gets missed by a lot of firms, Mark, when they're planning retirements for folks, is that they are not putting together a specific income plan. And so let's talk about what an income plan is and why it's so important. So let's start with, what is an income plan?
Yeah, this is something that you and I focus. It's the number one piece that we do when we get to the point, if we're going to engage, that we're going to put together where the income is going to come from, right? And that's the thing. The problem today is so much has changed when it comes to pensions. Pensions are pretty much a thing of the past, right? That was a wonderful tool that everybody needed. My grandparents, on my dad's side, he retired from Sears at the time, right? And he had a pension forever with them. And now with pensions gone away and only having possibly Social Security, if you only have Social Security, it's going to be a tough road in the Seattle area because of cost, right? So having multiple different places that we draw money from on a monthly basis can change everything. And the issue today is, again, goes back to pensions, right? We don't have them to create a second guaranteed income source. And that's what a lot of the places that don't do the true retirement planning like we do, we focus on income, because everything else that we do in the office springboards off of income, right? Once you get income set, then it makes it so much easier, because that client is going to know that they've got their needs are going to be met each and every month from a guaranteed place. There isn't a maybe income source. It's a guaranteed source.
That's exactly it, right?
Yeah.
And I think that's what's so important, is making sure that that income plan accounts for many different facets, right? We might think, and we've had this happen a lot, and we say this a lot, we use this phrase all the time, that your portfolio is not a plan, right? Your statements are not a plan. Your statements do not show you how much income you can receive in retirement. They may give a small estimate of what that income might look like, but that really is not a plan. And so we'll just mention it here. We'll pull up the number here on the screen, but you're more than welcome to give us a call if you'd like to get a review of your investments, get a custom tailored income plan, 844-342-7142. You're more than welcome to give us a shout. It's no obligation, complimentary. But coming back to that income plan, this is so key, because a lot of people miss out not only on what their income could be in retirement, right? Because what they've really done is, if you've been in growth mode for 30 or 40 years, you're invested one way, but now you're no longer contributing and you're going to start taking income out of your investments. Well, that means your investment strategy has to change to make that be successful. What we were doing when we were contributing to our accounts has to be different than what we're doing when we start pulling money out of our accounts. And so we also want that income plan to account for inflation. That's very important as well, to make sure that we have that same spending power through retirement. So number 2 was our income plan. Let's move into number 3, which is healthcare options.
Yeah.
This is really, really important. If there is a big gotcha when it comes to retirement planning, it's folks that miss out or potentially don't plan for what healthcare is going to cost. That's one of the biggest costs that affects retirees. And not only that, but typical inflation, let's say typical inflation averages around 2.5% or so. Healthcare costs don't move at 2.5%. They move much more aggressively than that, right? So how important is a healthcare plan as part of an overall retirement plan?
Yeah, I just want to say I'm in this business because of kind of what happened with my dad's father. When my father got Alzheimer's, we watched them pretty much get devastated of all their liquid assets paying for long-term care. And right now, facility very close to our office up in Seattle is, running close to $13,000 a month for full-blown care. Where is that going to come from? You need a plan. You at least need to talk about this. I think one of the biggest challenges that we have is clients tend to not want to talk about this, right?
It's not
going to happen to me. It isn't fun, right? And they just don't want to talk about it. So, but if you avoid this, you mentioned it, we say it all the time, if there's going to be a blow up to our plan, it's going to be the atom bomb. And that one, when that one goes off, it can devastate a true good set up plan because they didn't adjust the plan or have provision as to how they were going to take care of that cost, because it can be devastating. So you need to have an idea as to what you're going to do if and when. And that part I want to stress. The win is coming for over 75% of us. That's the thing that people want to, it always happens to the other guy, right? We have clients in our office right now that are dealing with it and have been turned down because they tried to get it and the company was like, no, you're not healthy enough now to be able to do it, right? That can be a big concern.
It can, yeah, absolutely. And, there's kind of two pieces to that, right? From the healthcare side, there's the day-to-day medical, so like Medicare, right?
Yep.
But then the other side of it is long-term care, which is kind of what you were talking about. And both of those are things that have to be addressed. And so, Medicare has to be part of an overall retirement plan, and that's your day-to-day medical, but there's a lot of decisions to make there, right? There's 4 parts to Medicare. So you've got Part A, Part B, Part C, Part D. Part A is pretty straightforward. Part B, also quite straightforward, but there is something that we have to deal with tax-wise called IRMA, right? Aunt Irma, a lot of people refer to it that way. And then Part C, Med Advantage or Med Supplemental. And there can be a cost with one and maybe kind of a hidden cost with the other. So you really have to have that be built in, and working with a group that can help you determine how those different things are going to affect your specific retirement. That's really the key here, is that your retirement is unique. It's not one and the same for everybody. There is no cookie cutter, one size fits all. And so because of that, we offer a written financial plan. Mark, do you want to let the folks know at home what they can expect if they give us a call?
Yeah, please. If you're viewing the show today and you're concerned about anything we've just talked about, maybe you're worried about where taxes are going to go. What about medical, like Casey just mentioned? What do I do for long-term care? What about income? Where's it going to come from? If you have any concerns, or maybe you're getting ready to retire from Boeing or have retired from Boeing, please pick up the phone. Just give us a call at 844-342-7142. That's 844-342-7142. Pick up the phone, give us a call, and have a conversation. That's all we're going to do, is just have a conversation.
So again, we're talking about 5 key areas to focus on in retirement to make sure that you're going to be okay in your retirement. We've talked about protecting what you save, having an income plan, as well as medical. So we've covered the first 3. The next 2, taxes and estate planning. Don't change the channel. Come right back to Elevate Your Wealth. Call 844-342-7142 for your own complimentary written financial plan with Risk Report. Why take unnecessary risk when you don't have to? At 65 years old, would you drive to the grocery store at 100 miles an hour if 40 miles an hour would get you there safely? When nearing retirement, are you still driving your investment accounts like you're in your 30s or 40s? Have you changed your investment elections since you first chose them in your retirement accounts at work? Call Casey, Mark, and the team at 844-342-7142 for your own investment risk report and written financial plan. Do you know exactly how much risk you're taking in your investment accounts? Now that you've accumulated a nest egg for retirement, you want to be certain the risk you're taking in those investments matches your goals and objectives. Call Mark, Casey, and their team at 844-342-7142 for your own complimentary risk report and written financial plan. Or use the QR code below to begin scheduling your appointment. You may not have time to recover from taking too much risk.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks took.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the 4th worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. Plan your retirement right. Call now for your own complimentary portfolio review and tax analysis.
Welcome back to Elevate Your Wealth. I'm your host, Casey Elkins. We're talking about 5 key areas that we need to pay attention to in retirement to make sure that we're going to be okay when it comes to our retirement. One of the biggest questions on people's minds is my money going to last me in retirement? And the answer to that really is, do you have a plan? That's really the question. So we've covered the first 3 points, which is making sure that we have protected what we've saved, that we have an income plan for retirement, and that we have taken care of what our medical might look like. Before we get to our 4th and 5th points, which are taxes and estate planning, there was a couple other things that we wanted to add on the medical side. Mark, there was something that you wanted to share.
Yeah, I want our viewers to know this. There is a big myth out there in this world that once you go on Medicare, not Medicaid, but Medicare, that your long-term care needs are going to be paid for by Medicare. That is a myth. So please don't continue to want to believe that. Because if you do and it happens and you realize all of a sudden now you're on the hook for $10,000, $12,000, $15,000 a month, you're going to be devastated and you're going to go, what am I going to do? So please, don't think that Medicare covers this, because it does not.
You mean I have to pay for myself? They won't pay for me?
Exactly.
Wouldn't that be nice if they would,
Yeah.
right? Well, here's the thing, right, is I think if you don't have a medical plan, if you don't have a long-term care plan, the state does have one for you. It's just one that you won't like, right? That's really the key here. And so this is where planning and having that conversation is so important. Let's move into our 4th point, which is taxes, right? So if we're going to move into retirement and we have a nest egg saved, we want to understand how much income can I take out of it. And all too often we see people get caught in, well, if I've got $1 million and I take out, let's say 4% or 5%, whatever that number is, well, you still have to pay taxes on that if you saved it in an IRA or a 401k.
Yeah.
And so the reality is we all have a hidden partner in our IRAs, in our 401ks, any account that is tax deferred, like a 403b or a 457. And so we want to make sure that we've accounted for taxes in the plan.
Yeah, it's funny you mentioned that, because this is another myth that I'd like to bring out. We had a phone call not too long ago come into our office. The individual literally believed that in his 401k, when he took money out, there was going to be no taxable event.
I want his 401k.
Yeah,
that sounds
exactly.
awesome. Yeah.
We'd all like that plan, right? That Uncle Sam is kind of a silent partner that we don't know, really, a background partner, but he can devastate that 401k. So please don't believe that taxes aren't going to be a big part of your 401k or your qualified plans, because it can come back. The 2 biggest eroders of our clients' money are taxes, number 1, and number 2, inflation, right? So you need to have a plan for both of those things, because your money is not going to last if you don't address those. And be smart, because there is some wonderful tax planning that we can do. We actually have a site that we'll talk about that viewers could go to if they would like to figure out how that tax is going to be affecting them.
Exactly, yeah. And I think it's really key that we mention as well that the taxes that you might pay in retirement may look very different than the taxes that you were paying while you were working. We know that the Tax Cuts and Jobs Act, TCJA, sunsets at the end of 2025. That could be changed with different legislation and things. But when you look at the debt of the country, ultimately taxes will have to likely go up at some point just to deal with the overall debt. And so the question becomes, how much taxes will you pay when you're in retirement? And what gets a lot of people tripped up is the idea that they know what their taxes are right now and make an assumption that their taxes will be the same in retirement. But there's no guarantee of that. So maybe we could share a brief illustration. Let's say right now you were going shopping for a new home and you find this beautiful home. It's perfect for you and your family. You're really excited about it. And so you go to the bank and you say, hey, here are my finances. Here's my statements, everything that you need to give me a loan. And the bank says, no problem. We got you covered. We'll give you a 30-year loan. Only thing is, we're just not quite sure what the interest rate's going to be. So at the end of 30 years, we'll go ahead and let you know what the interest rate is then, and you can pay us the interest at that time. That would be crazy, right? I mean, nobody would go for that.
Nobody.
And if you had a friend that came to you and told you that they were going to do that, you would tell them not to. But the reality is that's the same circumstance that people find themselves in with their 401k. Mm-hmm. You knew what the taxes were when you put the money in, but nobody told you what the taxes would be 30 years from now when you start to pull that money out. And so making sure that your taxes are part of your written financial plan, we cannot overstate that. That is very, very important, and you want to make sure that that has a spot in your plan. Now, the fifth piece that we're going to discuss, and we've got maybe just a minute to cover this, is estate planning. So we want to make sure that once we're taken care of, whatever assets are left are taken care of properly, that they're passed along properly. So how important is that to an overall plan, Mark?
Yeah, in our office, estate planning is kind of the piece that we go to toward the end of getting all our plans set up. And we are big believers in trust. We like to avoid probate if at all possible, because if you don't do some estate planning, you mentioned how the state can come in through Medicaid and they'll give you a plan for long-term care, right? It might not be one you like.
Right.
Same thing can happen and can be devastating to the people we love the most if we don't have a plan as to how we want to distribute our assets. The biggest problem is people need to be willing to talk about it. And so we, at our office, that's big for us. We want everybody involved, the children, sometimes grandchildren, because having a plan is going to keep your assets a lot of times from going through probate and really keep what could be some devastating fights, and all of a sudden siblings don't like each other anymore because money got involved. So please, if you're viewing this today, pick up the phone and give us a call. Maybe you're worried about your assets, how they're going to be distributed. We've talked about taxes a little bit. What about an income plan? Do you know where it's going to come from? Is it going to be guaranteed? So please pick up the phone, give us a call at 844-342-7142. That's 844-342-7142. Give us a call, and all we're going to do is have a conversation. You're going to leave your checkbook at home, but please pick up the phone and call.
Thank you, Mark. So again, you see the number there on your screen, 844-342-7142. You're more than welcome to come into our office to have a conversation, get a written financial plan put together by our team of financial planners. We've talked about 5 main areas, things that we need to focus on in retirement. And now would be a good time for you to make mental note of what these are. So number 1, we've got to protect what we've saved. We have to make sure that we keep what we've earned. Then we have to figure out how to spend that money effectively through retirement. And that income plan has to account for taxes and inflation. Third, our healthcare choices. What are we going to do for medical, long-term care? Fourth, how can we reduce the taxes that we owe? And then finally, fifth, having an estate plan to make sure that those assets move properly after we've enjoyed our time. So that being said, we've loved having you with us today. Again, you see the number on the screen, 844-342-7142. We look forward to seeing you in the office, and we look forward to seeing you next week right here on Elevate Your Wealth.